Okay, so when you come to synthetic indices, you really need to do top-down analysis. I don't believe in just depending on daily time frame. I don't believe in coming on daily and what is daily doing. I'll go to H4. No, I want to start from the end, which is monthly time frame, because there is a language that when you understand from the monthly and the weekly, you will be able to know what to do on the lower time frames. That is why, for me, I can't use trading view on synthetic, because trading view on synthetic start from daily time frame, and I cannot be trading using the trading view without knowing what the monthly time frame is doing. That is why the best platform for synthetic indices is the MT5, because it gives you the opportunity to see what is going on from the monthly, from the weekly, from the daily to the H4 to down to your key point of interest. So first of all, what you need to do is when you come to the chart, you start your top-down analysis. Like I said, the concept of market structure, higher high, higher low in terms of a bullish trend, bearish lower high, lower low, and consolidation, equal highs, equal low. Is this market structure characteristics is applicable to all time frames. So it is the same knowledge you are going to be applying from the monthly time frame down to the weekly time frame, down to your key point of interest. So our key point of interest, mostly I like to use H4 time frame, because for me, I like to wait for market to give me like the least time frame I can use to determine my selling neighborhood or my buying neighborhood is the H1. Below H1 is fake. So now in this particular pair now, we have to go to the higher time frame to see what is actually going on. I send this setup, even this setup here, on daily time frame. I sent this setup on that group, and since then the market has been dropping massively. So first of all, we have to go to the monthly time frame using market structure, because you have to use market structure knowledge. You have to use supply and demand knowledge, and also which other knowledge again? This is what you need: market structure, supply and demand. Then you determine your key point of interest, which is order block, whatever. So we now go to the monthly time frame. So this is the monthly time frame. You don't need all of this, right? But if you look at what is going on, you see that this market is obviously in a downtrend. So let me, what is this one doing here? Obviously in a downtrend, right? So let's talk about this particular point here. If you look at this point here, you see that sellers have been in control. And when you observe synthetic indices, most of the time is selling, right? So sellers are in control from the monthly time frame. And look at, they created a high here, a low, a higher high, and then the market started dropping. And from the past, how many months? For the past 3 months, look at it here. Let's deal with the current candles here. For the past 3 months, this market has been selling. So now my mentor used to ask, who are you? Who are you? Who are you that you think this market, you will just put your buy order here, this market will start buying? Are you a son of a millionaire? After seeing for the past how many months, look at this one, look at sellers. The only time buyers try to come in, sellers overtook them. And look at the candles here. It closed as indecision candle, telling you that sellers have been empowering this market. And for the past current 3 months, sellers have been in the market. So with this knowledge now, you need to be looking for what selling opportunities in the lower time frame. And also, after knowing that, okay, this market is dropping, what is the current monthly candle doing? The current monthly candle is also pushing. Look at the small wick here, and then it started rejecting, pushing down. Means the momentum from the monthly time frame is bearish. And it is this momentum, it is this market structure, it is this knowledge that will now go down to the lower time frame and become sellers. And then we'll start looking for the selling neighborhood or the major supply zone or the key point of interest for us to engage. Now, let's go down to the weekly time frame. So from the weekly time frame, this is synthetic indices. They don't give you much data like that on the higher time frame. So from the weekly time frame, you can also see characteristics of an uptrend, of a downtrend. This market has been in a downtrend, creating higher, higher low like that. And then, yeah, so the monthly, the weekly is showing us a downtrend, right? So with this knowledge now, what are you going to be doing? We want to be looking for market structure like this. From the H4 daily, we want to be looking for what? Market structure, because this point here alone, let me give you this point here alone, this impulsive drop alone, if you look at it from the daily and H4, you'll be seeing characteristics of a downtrend like this. So if you want to capitalize on this move now, what you are going to be doing is to be waiting for a structure to break the source candle, market come back there, you sell. The structure breaks, the sell candle. Market is not just going to be giving you all of this all the time. But sometimes break of structure, aggressive move, you also need to observe the aggressive move based on supply and demand concept, right? So now, aggressive move, a source candle that is responsible for the break of structure, market fail to reach there, create another aggressive move, break a high, then you need to update your key point of interest. This is what you want to be looking for, sell. And anytime market comes to that zone, they sell. Why is that? The market has been respecting those zones I'm sending on the group is because of the momentum from the higher time frame. So now that you know that daily, monthly, and weekly is going bearish, it doesn't mean there won't be any retracement from the lower time frame. So what are you doing now? If I'm looking for this structure now, this retracement does not mean it's buying. It's only coming to respect this source candle for a sell because it's going to respect what the momentum from the higher time frame is saying. So now, what are we going to be doing? Let's highlight this point here. We can highlight this one. Okay. This one here. From the weekly, we can highlight this one here. So based on weekly, it is not clear. So we want to be looking for what? Market structure to sell. Structure, this is our strategy. We want to look for this, we sell. Look for this, we sell. So because we know that the momentum is down, market is selling. So it is this structure we are going to be looking based on this point here. So we'll now go down to the daily time frame. Let me minimize. So now on the daily time frame, you see it is that same momentum before this market started selling. It is that same momentum that I know that the market is going to share that setup, but that I know that the market is going to sell from here. So now what we are dealing with this current one here. So now on daily, if we are to look for key point of interest on daily, daily is not clear. There's a lot of movement within here. So daily is not that clear. So now we move to what? We move to the H4 time frame. So you see on H4 is very, very clear because you know the momentum on the higher time frame. What are you going to do? You are going to be looking for what? Looking for this structure. This structure here. You know, this point here was that daily key point of interest that the market respected. So the market respected that setup, bridge the Dow theory, because when daily is retracing to go and activate, it changes from a mini uptrend, right? So you can as well, if you know what to do, because daily is going to retrace, you would have been looking for the same structure to take your trade, to take your buy trade until you get to the daily zone, and then the daily zone market structure the respect, right? And then give you a Quasimodo here. But let's say we look for this one. I want to look for buys. I want to look for sell here. So I will be looking for market structure for me to sell, right? This guy has been in a consolidation for some, like that daily is just moving. So here, I think this is the only high I can see here from this point here. So break of structure here. Then aggressive move here that break this structure. And when market comes there, it respect that zone. It went back up again, it's still respecting the zone. So here was the reason why I sent that setup. Because of the higher time frame momentum, I was still looking for market structure and all of that. So the first structure was here. The first setup I said was here. And market came close to the zone, to the selling neighborhood. It dropped, right? Then it break another structure. That was when I sent our updates and I sent this one. You see how I come out with this zone. So, and you see, anytime market comes into those zones, even if the market is going to disrespect those zones, at least one H4 candle will go down. And if you go to the lower time frame and sell for 4 hours on synthetic indices, that is a lot of money. So, that happened yesterday on no, let me check this one. Volatility 10. Not volatility 10, maybe okay. So this is how I come out with this zone of sense. I mean, this key point of interest. You need to really understand what the higher time frame is doing so that you use that momentum from the higher time frame to look forward, to look for your key, to determine your key point of interest, H4, H1, and sometimes, not always, daily time frame. If the market want to come, because if I see that, okay, this market is not ready to go. So from this point here, I think this was also this was last month. You see, last month, we sent a setup here, break of structure. You respect this setup before it changes. But based on market structure synchronization and also the higher time frame, I now realize that this market want to start a daily retracement. And if the market want to start this daily retracement, where am I going to sell? Because it's still selling. So from the daily, I see that this market break a structure and also see this other block. And I see this aggressive move. This is a strong supply zone, a strong supply zone. So that was when I know that, okay, this market is actually, because the daily is retracing, the only possible area that daily can experience another selling pressure is here. Is here. Why is it here? Look at the aggressive move. Aggressively. So it means that there are a lot of sellers here waiting. If the market comes back here, we buy. So you wouldn't have been looking for buying here, because where this market is, I mean, you wouldn't have been looking for selling at this retracement, because where this selling is taking place, there is no selling territory here. The selling is just on its own. So you want to be attacking the market from zone to zone, right? So now this retracement is actually because if daily is going to move, if daily is going to move from this point to this point, it's also going to be in a short uptrend from the H4 or H1. So you can say, fine, based on your top-down analysis, at least the market wants to retrace. And for this retracement to take place on daily, if you look at the momentum from the weekly, you will see that weekly will be forming a bullish candle. So that bullish candle does not mean monthly is still showing a bearish candle. The momentum is bearish, but weekly is showing a bullish candle. What does that mean? It means that this bullish candle daily, weekly is showing, is taking place, or I mean, it's affecting the daily retracement. So where is that selling going to take place? Until what? Until the daily experience a strong supply zone. So if you look at that, the market by that time, this was a strong, obvious supply zone. So that is why I mark this zone on the daily time frame. So are you going to be waiting for market to come to the daily? Because it's going to take days. So if you know what you do, you can go down to the H4 time frame and say, fine, I don't have that patience to wait for market to come to the daily, because it's just going to take like weeks, like 1 week or thereabout. So what am I going to do? Because daily is retracing, we are now in a short uptrend. This short uptrend, what am I going to be looking for? The same structure. Aggressive, the break structure, source candle, you capitalize. So now there was a break of structure here. And if you look at the break of structure, you see we have aggressive move here. There was a break of structure here. Then look at the aggressive move. Before this break, there was an aggressive move before this break here. So the source candle, where is that source candle? This one. You already know that, okay, fine. This is my selling territory. This is where I want to look for the buy for me to keep looking for price to get here. Because weekly is also, the weekly candle is what is bullish, supporting that retracement that is taking place on daily. So if the retracement is taking place on daily, this is what we call market structure synchronization, bro. So now you want to also be looking for the same structure, higher, higher, and this one, higher, higher, low, aggressive move that break the high, the source candle responsible for the break of structure, this one here. And now the market buys. You can say, fine, the market bought for about how many hours? For about 8 to something hours. This is a lot of pips or a lot of money in synthetic. But if your psychology is strong, you know that definitely from the top-down analysis, the only place that is going to push this market for a sell is here. So you can definitely hold your trade. But you don't need to become a swing trader by force. You need to master yourself, right? So you can say, fine, profit here at this low here, I'm out, right? And then the market break structure again. Look at the aggressive move. After a lot of consolidation here, then something happened aggressively. What do you think that make this market move aggressively and take out this structure? It is this buying neighborhood, the buyers that are pushing this market. It means that if the market make mistakes and come back here, there are still a lot of buyers here that is going to push the market up. This is what you are going to be looking for, right? So now, you mark your source candle here. That's why I say the market sometimes will not give you what you want as if you are the owner of the market, right? So break structure, what happened? Failed. The market failed to get here, it moved, right? And then you know already that the first, this move now, break of structure, but this one was not able to break structure. There was an aggressive move here that break this structure. So this aggressive move just touched half of your zone. This is a daily zone. It doesn't mean if market enter, it's just going to sell. It's not just going to start selling. So this aggressive move now would have given you an idea that, okay, fine, this is going to be my source candle for a break of structure. Because you are already close to your zone, you are taking your profit here. And then market finally entered the zone. Then look at how the market has been respecting the lower low, why it's going up. And all of a sudden, market from your daily zone, you experience that selling pressure. It is the selling neighborhood from the daily time frame that where we determine our supply zone or our key point of interest that was able to disrespect this Dow theory, breach the last lower low here. But like I said, for you to buy, for you to sell, you would have been looking forward your early entry on the H1 time frame, right? But now that the Dow theory obviously break on H4, the sell is not going to continue. You are waiting for the retracement because you know that is going to drop. This is the only knowledge you need. Market structure, top-down analysis, supply and demand. Then you also need to observe the aggressive move that is responsible for that break of structure for you to now know that this is a strong key point of interest or a strong selling neighborhood or a strong buying neighborhood. So at the market change structure started selling from this selling neighborhood, from here also, from this selling neighborhood, the market sell, you will continue to be looking for market structure. Even till now, it's still going bearish until the market changes again. Until what? Until the daily enter another retracement. Because while your market is making higher low on H4, it's also that higher low is also going to take place on daily. It's also going to take place on weekly. And if it's taking place on daily or weekly, it's going to affect the Dow theory is going to definitely breach from the H4, and then the market will start going up. So when you see the Dow theory breach on H4 and the market started going up, you don't have to be looking at that H4 alone. Go back to the higher time frame and see what causes it. You will see that, okay, weekly is on now on a retracement, or daily is on now a retracement. And looking at your momentum from the daily or momentum from the weekly, you can now say, okay, fine. Where is this weekly or where is this daily going to sell? Because overall from the monthly, it's still a sell. It's just that daily is doing a retracement. So where is that supply zone on daily? You now determine, okay, for instance, say, okay, fine, daily is going to enter here. So now, how are you going to do? Are you going to wait for market to go all the way to daily before you start selling? No, because the Dow theory has been breached. We want to be looking for structural breaks. Market comes, you buy. Structural breaks. Aggressive move that breaks structure, market failed to come, created another aggressive move, break structure, you update your. So this is what you are going to be looking for. The market is not going to be giving you all the time because your strategy cannot work all the time, right? So this is what you are going to do. Aggressive move, you enter. Aggressive move that break a structure, it shows that aggressive move shows how strong that buying neighborhood is or how strong that selling neighborhood is. Then you now, when market comes here, another step, which is entry techniques. That is when entry techniques come. You started planning. Now that the market is in the selling neighborhood or the buying neighborhood, what is going to be, what am I going to see for me to know that this market is going to hold but from that zone? That is when entry techniques comes in. So for you to be sure to enter from the lower time frame is just your understanding of top-down analysis and also market structure and key point of interest. So this is what you need to do. This is what you need to know before looking for entry. So if you don't know how to determine good key point of interest, definitely you are going to be having problems when attacking the market in the lower time frames in form of entries, right? Because for me, entering is the hardest in synthetic indices. When market comes to your key point of interest, it's a war, right? It's a war between buyers and sellers. So what I learned from my mentor is that, let's say we have a key point of interest here. We have a key point of interest here from the H4 time frame, and then the market comes here. Finally, aggressive move, break of structure, market comes here. What am I going to be looking for? This is where manipulation also take place. Liquidity. They want to manipulate you before, because they don't want you to make money, right? They want to manipulate you. So synthetic indices is very technical. So the moment the market enter into your zone on the lower time frame, you will start seeing a lot of moves. Those are fake moves. A lot of moves that will make you to enter. Oh, it's going down now. That aggressive move you see after the market got into your key point of interest is fake. They want you to, oh, it's selling now. You start retracing. So entry techniques is another skill you need to learn to attack the market in your key point of interest or in your selling territory or in your buying territory, right? So now, this is a very simple approach. The only thing you need to know is to learn how to do top-down analysis, right? And then when you understand the momentum from the higher time frame, look at this one here. Look at this one here. This one is volatility. Volatility. Let me clear the chart. This one is volatility 150. Yeah, 151S. So I know that this market is going to sell from here. The selling pressure, because if we do top-down analysis here, it's showing the momentum is bearish. So this is a low, a high, break of structure. So I know there is a strong zone here, supply zone here. But remember, there is another supply zone here. This is a rally-based drop, and this is a drop-based drop. So I'm looking at this point here. Are you sure there's going to be enough buyers that is going to break this selling neighborhood to come to this one? Because if buyers are able to break this selling neighborhood, I know that, okay, the next point that they are going to experience a lot of strength from the sellers is here. So I will continue looking for my buys, right? But then this selling neighborhood, the buyer tried to break it. No way. What happened? When the buyer pushes this market for push this day, seller take over, but these sellers are not coming from the selling neighborhood, which is the territory. They were defeated by buyers, and then buyer push again, buyer push again. The push finally got into the selling territory. What happened? Sellers take over and they started fighting. So you can see that fight from where? From the lower time frame here. Supply and demand. Let's go to the 1 hour time frame. So this was the point I saw. From the 1 hour, I saw that aggressive, because I have done my analysis from that point. I know that it's going to sell. From this point where the market was going to buy on daily, what are you going to be looking for? Market structure wise for you to be buying to that point, right? So let me leave that one. So when market enter here, what happened? On H4 is going to be late. For you to cash early entry, if you believe your zones, is to go to 1 hour time frame and want to see 1 hour M30. Now, this is the last supply area, demand area. After this demand area, there was an aggressive move that moved impulsively to the selling territory. Now, we saw this aggressive sell. This aggressive sell is fake. So this aggressive sell now were able to break this guy, defeat this guy. It's a sign. So this aggressive move, that first aggressive move, and I'm going to get to entry. That first aggressive move from your key point of interest is fake. And someone will say, oh, because they taught you bearish engulfing. Bearish engulfing does not work on these entries. You see this, like for instance, you see this impulsive move selling, and then you just come on the chart, you saw this one. Hey, you started selling here. Why? But because look at, it's showing you that sellers are empowering the market. So what are you going to do? Why? Because it's going down. Because at this time here, you must have been waiting to see what is going to happen until you saw, maybe you see this move now. Aggressively. Aggressive. It's going down. It's going to leave you behind. Why? Some people will start selling here. Some people, this aggressive is fake. Market will always want to come. You want to, first of all, they cannot get to this selling territory and they allow sellers to just take over them in profit like that. This is the aggression, faking sellers to go in and then they move. This is 1 2 hours candle. If you enter here and they move against you, what do you think will happen to you? You'll be in pain, right? So these are first aggression from the, so if each time the market enter your selling, go and back test. If each time the market enter your selling territory or your buying territory, there's always a first aggressive sell. If we are expecting a sell, there's always first aggressive sell. 1 to 2, 3 candles. It's a fake. Calm down. If you enter there, they will use you as liquidity. So let me not go details on entry. We are still talking about top-down analysis and key point of interest. So I know that, okay, this move, they are coming. What did I do? I went down to M30 to see things clearly here. So let me adjust the zone to see things clearly. They come back to this zone now. This is the other block. That aggressive move, pa, 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 break a structure here.